Welcome back to the CryptoWorld channel, everyone. My name is Josh, and this video is an important one to watch all the way to the end because we've just seen the Federal Reserve hike interest rates by another 75 basis points, which initially caused markets to pump up until the Jerome Powell press conference. Because what the chair of the Federal Reserve said in that press conference actually caused markets to dump not long after. And in just a moment, I'll be talking more about that. Also, in this video, I'll be covering what the Federal Reserve is likely about to do next. I will also be covering the Bitcoin price as always, as it is just holding onto support, and the Ethereum price, which has already initiated its break to the downside. All of that and so much more later in the video, so make sure you watch to the end. First of all, we need to talk about the recent FOMC meeting and rate hike. Of course, we saw a 75 basis point hike, which was the most likely outcome if you're watching my recent videos on the channel. And so this new 75 basis point hike has increased the target range for the federal funds rate up to 3% to 3.25%. But the majority of these charts you'll find track the larger figure, so 3.25% as the federal funds rate. And now, once again, if you've been watching my recent videos over the last few days, you would know going into this FOMC meeting that the most likely outcome was a 75 basis point hike, with the market pricing in a small probability of a possible 100 basis point hike. And so based on that information, technically speaking, the 75 basis point hike was the more bullish option, and the 100 basis point hike was obviously the more bearish option. And so due to the fact that we did end up seeing a 75 basis point hike, as I tweeted out pretty much as soon as it happened, not long after the rate hike was announced, we actually saw a pump across markets. Obviously, as you can see here, this is the price of Bitcoin on the 3-minute time frame. It was pumping over the next 30 to 50 minutes, pretty much immediately after the 75 basis point hike was announced. But that was up until the Jerome Powell press conference, which took place roughly half an hour after the rate hike was announced. And in case you don't already know who Jerome Powell is, he is the chair of the Federal Reserve of the United States, so definitely something important to pay attention to. And now, if you want to watch the full 40-minute long press conference, it is over on the Federal Reserve's official YouTube channel if you want to. But basically, what Jerome Powell was saying in that press conference right here that caused markets to dump not long after was a mix of multiple things. One of those things being his hawkish tone, basically making it very clear to everyone that the Fed is very focused at bringing inflation back down to 2%, and they're basically going to stop at nothing until inflation comes back down. And so already based on that, markets were beginning to price in a little bit more pain ahead than already expected. But then a little later in the press conference, Jerome Powell actually said that the labor market is still too strong, so he actually prefers to see a softening in the labor market, which basically means more rate hikes. And on top of that, Jerome Powell actually mentioned in that press conference that he basically wants to see a correction in the real estate market to help reset the real estate market. And so obviously based on all of that was said in the Jerome Powell press conference, that essentially caused a dump across markets as markets began to price in more pain ahead. And so once again, just a really quick summary right here, we saw the 75 basis point hike, which was the bullish out of the two options. And so initially over the next half an hour to an hour, we saw the markets pump up until the Jerome Powell press conference. And based on what he said in that press conference, that essentially dumped markets not long after. And we can actually see that the market did price in some more pain ahead based on what the futures market is currently pricing in for the probabilities of future Fed meetings. And now, of course, between now and the next Fed meeting, which by the way is towards the beginning of November, these probabilities can change and will most likely be changed based on what CPI inflation comes in at next month. But basically, as of right now, based on what the futures market has actually priced in, there's around a 35% chance of seeing a 50 basis point hike at the next Fed meeting at the beginning of November, and a 65% chance of another 75 basis point hike at the next Fed meeting. And so at least as of right now, the most likely outcome at the next Fed meeting is another 75 basis point hike. And if we see that happen at the next Fed meeting in a little over a month from now, then that would essentially bring the federal funds rate up to 4%. And just before getting into the charts today, quickly taking a look at the probabilities for future Fed meetings beyond the November Fed meeting. And if we're simply looking at what the majority of the futures market has currently priced in, the majority of the futures market, once again, has currently priced in another 75 basis point hike happening at the next Fed meeting as the most likely scenario. And then the meeting after that, which takes place in December, the majority is expecting another 50 basis point hike in the December Fed meeting. And then after that, during the Fed meeting that we see in February next year, the majority is expecting just a 25 basis point hike in that Fed meeting. And simply based on what the futures market has priced in right now, that is currently expected to be the final rate hike before essentially the Federal Reserve holds the federal funds rate at that level for quite a while. And if you've been watching my videos over the last 1 to 2 months, then you'll know that previously these future probabilities were showing the rate cut, so the full-on Fed U-turn, to happen sometime during the middle of next year, as in around June or July, was previously when the majority were expecting the Federal Reserve to actually begin cutting interest rates again. But once again, based on what Jerome Powell said at the recent press conference, basically telling us that there's probably going to be a little bit more pain ahead, we've seen market participants actually push back that point where the Federal Reserve will eventually begin cutting interest rates again. So instead of perhaps around the middle of next year, it's most likely, based on what the market is currently priced in, it's most likely going to happen towards the end of next year. And so at least as of right now, the majority has already priced in for the federal funds rate to go up towards 4.75%, also known as 475 basis points, and to be held there all the way up until around September to November next year. And then at that point, sometime later next year, begin cutting interest rates again. And in case you're new to all of this, this is definitely something important to watch out for, because when we eventually see that Fed pivot point, so when the Fed eventually goes from hiking interest rates, which it's doing right now, to then cutting interest rates, which is a question of when, not if, then when that pivot point actually happens, that is when we can be much more confident that the bottom for markets are in, talking about the crypto market and the stock market, for example. But anyway, jumping into the chart, this right here is the NASDAQ 100 index on the daily time frame. And over the last 1 day, we saw an initial spike to the upside in the NASDAQ 100 index the moment we got that 75 basis point hike, which was the most likely scenario once again. But like I just said earlier on that Bitcoin chart, as soon as we saw the Jerome Powell press conference, the same thing happened for the NASDAQ 100 index. We saw another dump across the stock market when Jerome Powell came across a lot more hawkish than people were expecting. But right here on the chart, as a technical indicator, this is a bearish signal, obviously breaking below the golden pocket level of support and now confirming a rejection from that golden pocket, which essentially confirms this as resistance now. Once again, this is technically a bearish signal, telling us that we're most likely going to experience some more bearish price action. And as for support, we could find some support around this 78.6% Fibonacci level, which is sitting at roughly around 11.5 to 11.6K in the NASDAQ 100 index. But anything below that support level, then I'll expect a retest of the June lows all the way back there, which is sitting at around 11,000 in the NASDAQ 100 index. And in case you're new to all of this and you're wondering why I'm covering the stock market on a crypto channel, it's because, as I've been saying for nearly 2 years now on this channel, the stock market and the crypto markets are heavily correlated, which means if we see a major pump across stocks, we're most likely going to see a major pump across crypto, and vice versa. If we see a dump in the stock market, we're probably going to experience a dump in the crypto market. And speaking of the crypto market, getting into the Bitcoin part of this video, and right now at the time of recording this video, the price of Bitcoin is still holding on to this level of support, which is our most significant range of support, by the way. And this price range is coming into play in between around 18,500 and 19,000. And once again, as I've been mentioning a lot recently on the channel, there's obviously a lot of buyers in this price range, as we can see time and time again when the price of Bitcoin enters into this price range at around 18 to 19,000. Over the last few months, we've continued to see the price of Bitcoin get bought up out of this price range. But if the Bitcoin price continuously retests the same range of support, that actually weakens the range of support, because with each test into this range of support, that is essentially removing some buyers out of the market, because once again, there's obviously buyers in this price range buying up the price of Bitcoin, which is literally what is supporting the price of Bitcoin at this price range. But as the price of Bitcoin continues to test this same price range, the same buyers at these levels, you're essentially removing some buyers out of this range of support, as some of the buyers will eventually run out of dollars. And so if the price of Bitcoin starts confirming a break below this range of support, below around 18,500, then that would basically tell us that there's still sellers remaining right here, but there's really no longer any buyers remaining at these prices. And so if the price of Bitcoin confirms a break below this important price range, we could end up seeing another decent leg to the downside until we eventually fall down to the next pool of buyers. And so technically speaking, based on the trend at the moment in the price of Bitcoin forming lower highs and lower lows, obviously we're still more bearish than bullish as of right now. And pretty much the only bullish things that we can talk about on the daily time frame is the fact that right now we're still actually holding on to this level of support. We haven't confirmed a break below, at least not yet. And also we're potentially forming a possible bullish divergence here with lower lows in the daily candle closes, but higher lows in the daily Bitcoin RSI. But as of right now, this hasn't actually been confirmed, because we still need to actually confirm the higher low in the daily Bitcoin RSI, which can be confirmed with at least one daily candle in the green. And by the way, this daily candle closes in roughly around 17 hours from now. But anyway, zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, we also have another possible bullish divergence forming right here. And technically it has been confirmed with one 4-hour candle close, but ideally seeing another 4-hour candle close in the green would be even better, because as you can see here, we have slightly lower lows in the 4-hour candle closes, but higher lows in the 4-hour Bitcoin RSI. And so technically speaking, this does mean that we're due to see reduced bearish momentum in the somewhat shorter term relative to the 4-hour Bitcoin chart. And also, if we're looking at the 4-hour Bitcoin MACD, right now this is showing almost no momentum to either direction. We can see in the histogram, it's extremely flat when we're going into both the green and the red at the moment. And so simply based on the 4-hour Bitcoin price oscillators, one of the most likely scenarios in the shorter term for Bitcoin, as in potentially over the next 1 to 2 days, is most likely going to be some more choppy sideways price action. And once again, we have some short-term support at slightly underneath 18,500. And as for some short-term resistance, we have resistance right here at around 19.4 to 19.5k, and anything above that level, I would expect resistance up here at this previous golden pocket, which is sitting at around $20,000. And now, just before getting into the Ethereum charts today, there's actually a huge opportunity for anyone who trades Ethereum, which is winning a potential share in a $1.1 million prize pool just by trading Ethereum over on Bybit. And so if you trade Ethereum anyway, and you want to have a go at winning a share in a $1.1 million prize pool, I'll leave a link to this page in the description down below and also in the pinned comments. And just below that link, I'll also leave a link to this page where you can actually claim a $1,000 airdrop in the form of an Ethereum long position or an Ethereum short position. And so what you could do is claim this $1,000 Ethereum long position or short position, and then you can actually use that to potentially win a share in this $1.1 million Ethereum trading prize pool. But it's important to mention that if you actually want to claim this $1,000 airdrop, you need to have a Bybit account using the link down below, and you need to deposit $1,000 on that account within 7 days of opening that account with the link down below. But anyway, taking a look at the Ethereum chart, this right here is the daily Ethereum to US dollar chart, and obviously we have this previous head and shoulders pattern with a possible left shoulder, head, and right shoulder here. Now, obviously in the past, I've talked about how even though this pattern isn't really a perfect head and shoulders pattern, because obviously the left shoulder is a little too small compared to the right shoulder. But with that being said, if there's enough traders out there looking at this as a head and shoulders pattern and essentially trading it as a head and shoulders pattern, then it becomes a self-fulfilling prophecy as people sell Ethereum or short Ethereum, pushing the price lower. And so in this case, considering Ethereum has already broken the neckline multiple days ago, which I did actually talk about on the channel back then, that does set up a technical price target for this potential head and shoulders pattern to the downside. And that technical price target is sitting at almost exactly $1,000 per ETH. And we also have confluence at that $1,000 price target based on these previous lows. So obviously we have previous support at 1,000 and a price target at 1,000. But it is important important to understand that between now and that price target, there's obviously some other levels of support, such as these Fibonacci levels. We have this 78.6% Fibonacci level, which is sitting at just above 1.1k, more specifically at around 1120 to 1130. But if you're looking at this golden pocket level of support with the Fibonacci levels on the linear scale, this golden pocket is sitting at around 1.3k. So already we've seen a daily candle close below that important support level, which is technically a bearish signal. But if you use the logarithmic scale for these Fibonacci levels, then technically you could argue that the price of ETH hasn't actually confirmed a break below the golden pocket, at least not yet. And in this case, the golden pocket would be sitting closer towards 1.2k. So that could be another support level to keep in mind. But like I just said, on the linear scale, the price of ETH has already broken below that golden pocket level of support. So technically, we're still looking more bearish than bullish, even just based on the trend alone, obviously forming lower highs and lower lows. We're obviously looking more bearish than bullish. We have not confirmed a bullish reversal as of right now. And this could also be said about the 4-hour Ethereum chart. Obviously, we saw another rejection from the 3-day simple moving average, which I've been talking about for the past few days. Because throughout this shorter term downtrend so far, this 3-day simple moving average has acted as pretty much perfect resistance and has actually acted as a perfect signal to short Ethereum. But something else to consider right now on the 4-hour Ethereum chart, just like the 4-hour Bitcoin chart, is a possible bullish divergence right here, because obviously we have lower lows in the price but higher lows in the RSI, and as of recording this video, this has already been confirmed with one 4-hour candle close. And so technically speaking, this bullish divergence tells us that we're due to see reduced bearish momentum for Ethereum in the shorter term, as in potentially the next 1 to 2 days. And looking at the 4-hour Ethereum MACD, this is also showing us that we have very low momentum to either direction at the moment in the immediate short term. And so even though the price trend is obviously more bearish than bullish, we could potentially be about to enter somewhat of a pause within that bearish trend, where the price might just chop around sideways for a little while, maybe over the next 1 to 2 days. And if you want to know how to maximize your profits in crypto, no matter if the price is dumping, pumping, or just chopping around sideways, either way, you can make money in crypto by watching these videos popping up right here on your screen. The video in the top left of your screen shows you how to make money if the price is going either up or down, and the video in the bottom left of your screen shows you how to make money in crypto if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.